I have a perfect guest for you. Milind Karmarkar, Head of Research of Dalal Broacha. I've always maintained that he's one of the smartest stock pickers on D Street. Mr. Karmarkar, good to have you back. Thank you for joining us.
Thank you.
I guess my introduction was the first question in itself. Has a bull market started? Because that's the chorus on D Street, that a 2003 like bull market has started.
Well, to answer you, yes, I do think that the bull market has started, because about 5 years we had a stagnating market. The economy was not doing well. And as of now, if you ask me, it's hope. The numbers have not changed in the economy. So what we are seeing is a build-up of hope. We have a stable government at the center. So I definitely assume, or the probability I put to having a good time ahead or good economy ahead is very high, maybe to the tune of 80 or 90%. Because ultimately every uptick in an economy starts with a feel-good factor. And the feel-good factor is definitely there in the nation. In fact, personally, every day I also feel that, okay, now I'm going to see something new.
अच्छे दिन आने वाले हैं.
हाँ, अच्छे दिन आने वाले हैं या अच्छे दिन आ गए हैं, whatever. But yes, I do think that it's a start of a big rally in the markets. I mean, supported, of course, by a better economic situation.
What drives any bull market are 2 or 3 factors, and they're common to any bull market, which is a lot of liquidity, attractive valuations, and a secular improvement in earnings.
Correct.
So sentiment is strong. There is a lot of liquidity, but earnings, the basic fulcrum of any bull market, that fulcrum is still shaky.
I completely agree with you there. As I said, that current whatever rally we have seen so far is a rally of hope. Unless and until 6 months down the line, it ultimately culminates into improving earnings, we will see this bull market continue. But at least I hope that the government will do all the positive things which can drive the economy and therefore drive the earnings. Maybe 6 months will become 9 months. So you may see some correction coming in, which I think will be an opportunity to buy again.
There is a very thin line, or I would say a blurred line, between hope and hype.
Of course. Of course.
How much of the current market action is hope, which is realistic, and how much of the current action is pure hype?
See, hope always is exaggerated, and that is what has happened. So the kind of move which we saw in many stocks, I think there has been an exaggeration of hope, and you may see some correction coming in. So I agree with you there. In addition to that, my worry is that a lot of people are moving towards very quite unknown names or not so good names, and that is what slightly worries me. I think there could be a correction where people who are investing in unknown names or not so good promoters could see some kind of a hit coming in.
So Nifty is up 25% from the recent low.
Yes.
The small cap index is up more than 60%. The mid cap index is up more than 40%.
Yes.
I've told you the good part.
Yeah.
What is the bad part?
Well, the bad part, as I said, is that a lot of money, especially the retail money, which I see is flowing into unknown names, which I think is a very high risk, and there are chances that people may burn their fingers. If you see some kind of liquidity slowing down, because all said and done, one thing is definite, that globally all markets are up. So our market is not an exclusive market where money is coming in. The only thing is that Indian markets, frankly, are so shallow, or as you would be knowing, that the market cap of Apple is probably equal to the free float of Indian market, at least some time back. Now I don't know. So
nothing has changed.
So there is such less liquidity which will be required for to push up the markets, and that is what is exactly happening. So if someone one point of time, say an FI, thinks that, okay, we should put a break, or what if we want to get out, and there is a break on inflows, I'm sure the market will give a correction.
So how should one invest in this kind of a market? How are you investing? Currently, beta is a universal choice. The heart of the market, which was IT and consumer, has changed, and the new heart of the market is, after the bypass, which is economy, banks, to some large extent industrials.
See, I think these are all, frankly, this type of segregation is good for momentum investors. As far as I am concerned, I think good businesses bought at reasonable prices will always pay you off. And when I am saying good businesses, these are types of businesses which have got a very long-term growth potential.
That's a cliche.
Yeah, it's not a cliche actually. I'll tell you the reason for that. Take for example commodities. You know, they run in cycles. You would say that consumables also run in cycles, but yes. But look at companies which are in consumer area. The kind of growth which is possible there is mind-boggling. Now, similar kind of growth, at least I don't see in commodities, and that is the reason why I say that companies where, as far as I am concerned, companies where I understand that a long-term growth potential is there, where government is putting everything in place so that over a longer period of time you have per capita income moving up. So these type of companies is where I'll continue to buy and hold. But it is also true that there are some opportunities which will always come in. Like a few months back, we had engineering companies which were available at a decent valuations. And probably if one bought into it at that point of time, they have almost doubled. That is not true with companies in the consumer sector. Okay. So they have not moved up that much.
There are issues which are being raised on the IPR front. There's some people who feel very strongly about it compared to others. But I do think that the Indian government should engage in good dialogue with the US government on this count.
Catch Nilesh Gupta on The Interview, only on ET Now.
Ria, you used to come to me for donation. Why not this time?
Since you've stopped your dance classes,
So what if I have retired? I still have a source of regular income.
Meaning?
I mean National Pension System.
National Pension System. It saves a part of your income till you're 60. And in retirement, you have assured investment returns every month at your monthly salaries.
1800-110708.
And their website?
www.pfrda.org.in. Investing in National Pension System also saves taxes.
National Pension System.
You work most of your life making your money. You carry it wherever you go. For the food, the clothes. To get what we want. To keep what we need. My money, my honey, and my broker, Mr. Soni. So that Chunnu Mundu can fly. And that smile, when you hit the 60 high, don't hold on, they need to move. No, that won't work.
You snooze, you lose.
Moving is living. So move your money with Investor's Guide. Only on ET Now.
Happy 5th anniversary ET Now from Mark Matthews at Bank Julius Baer in Singapore.
The general view is that there is a tectonic mandate, there is a big mandate, there's a tectonic shift, and it's time to buy into companies, businesses, sectors or themes which will benefit because the economy will progress. But your investment thesis is that I will still stick to consumption. I will not throw away some of the good quality stocks. I will not chase momentum. I'm not inclined to go down the ladder.
Absolutely. I completely agree with you there. And my focus will always be on, as I said, that I'm bullish on consumers. I think over a longer period of time, all stocks which are correlated with consumption should do very well. There will be opportunities which, according to me, will be short to medium term opportunities where one can invest and get in and probably get out in time if one is not too greedy. But otherwise, I don't see a engineering stock like last time going up 40 times from here. I think at best they will be slightly better than the markets.
So which sector will throw up the multi-baggers? Because for millions of our viewers who are watching this show and for some of your investors,
yes,
the curiosity is that how do I find that next multi-bagger where I put my 100 rupees and in 3 years and 5 years my 100 rupees becomes 2,000 or 3,000?
That's very difficult to take a call, frankly, because which of the smaller companies, ultimately if you are looking at multi-baggers, typically you invest in mid-caps. So you need to see to it that management is able to deliver the kind of returns. Management is good in corporate governance. So if you are comfortable with all these things, then you invest in small or mid caps. Like Some time back, we looked at a company called PTC Financial Services.
So tell me more about it.
Now, this company is a small company doing business which is similar to a PFC or a REC. But in size, in terms of outstanding loans, it's probably 30 times smaller than a PFC or a REC. It has got a 0 NPAs. Its ROE is reasonable, not as high as PFC or REC for simple reason that they have not yet fully deployed their capital. So that is the reason why, its ROE is slightly lower. But their NPAs are 0, their gross NPAs are 0.09%, and their growth rates are significantly higher than PFC and REC. So these type of companies, I don't think that, it will be out of whack to say that this type of a company can grow, say, 6-7 times and still be at a comfortable size. So I think I would invest in these type of companies. Again, as I said, that these are, I need to clarify that these are my thoughts and this is not an investment advice. So
fair point, and thank you for the disclosure.
Yeah.
I would like to draw your attention to the PTC 1-year chart.
Yeah.
The stock has gone from 10 rupees to 30 rupees.
Absolutely.
So it's already been a multi-bagger and you still feel that it could be a multi-bagger.
Yes, because frankly, if you ask me, that I don't look at price. I look at how much can it grow from the current level. So you call it value or whatever you call it. It's at about, I think, 1.2 times book still. So ideally, any banking or finance stock at book or below book is what one should look at.
So you have to buy PTC financials at current price of 30 plus.
Yes, definitely.
Bata, great call. It's been a real multi-bagger idea for you.
Yes, it has been.
It has gone from 300 to 1200.
Yeah.
It is technically it is doing all the right things. The company is growing.
Yeah.
Do you think Bata has a long way to go? Because some would argue that Bata is a mature business. It's a discovered stock. There is nothing new about it.
See, again, in Bata, the kind of opportunity which is there is massive. We are at $1,500 per capita income. There are very few people who have got 2 pairs of shoes. Some even don't have 1 pair of shoes. So the opportunity which is there is massive. So I won't be out of whack if I say that maybe 10-15 years down the line, Bata could be a $3-4 billion company. So that is the kind of opportunity.
Why are the margins so volatile? Q4 margins were not impressive.
No, margins there are 2-3 things. That one is that they continue to do VRS. That is the first thing. Second thing is that they are in an expansion mode. So they have been putting in new stores. Now, new stores take some time to mature. Because of that, rentals come in. And since rentals are very high, the ratio of rent to sales goes on increasing. So that is one of the main reasons. But over a longer period, I would rather look at raw material to sales. So as long as they are in a comfortable level, I wouldn't mind to keep on buying Bata. Let's put it that way.
So they are planning to open about 100 stores.
Yes. They have been doing that for last 3-4 years.
That's not unnecessary expansion, because if they're expanding, they're buying real estate or they're renting real estate when the real estate prices are slightly strong.
See, they are looking at long term. And real estate prices, frankly, have not moved up that much. In fact, they have come down a bit. And having said that, they also have a policy that if the store doesn't make profits in 1 year, they close down the store. Okay. So they are quite clear about it.
So is Bata a buy at 1200 also?
Yes, it will continue to be a buy.
Do you have a price target for Bata?
No.
But
no,
you're happy to own Bata for next 3 to 4 years?
Yeah, comfortably.
I like the confidence in your voice. Mahindra and Mahindra Financials, a stock which we discussed at length last time.
Yes.
There is a lot of volatility in the numbers. Q3 numbers, the NPAs went up. The business in South or the truck business in South is not doing well.
Yes.
The housing finance business is picking up, but it has not reached a significant size.
Yeah.
What is the deal with Mahindra and Mahindra Financials?
Again, it's initial years, frankly, for M&M Financial. And these type of things keep on happening in an economy. If the economy is not doing well, obviously there would be issues in commercial vehicles. There will be issues in tractors. So they have been aware of these things. Like last year we discussed about their banking license, I remember. So whether they should go into banking license or not. And they took a probably wise decision of not going into banking license. So even as far as these bad loans are concerned, they are very well aware of it. They had taken a hit in the Q3. Q4, if you see, there has been some improvement in asset quality. And as the economy improves, I think NPAs are not write-offs, actual